Good afternoon again, everyone. My name is LaShondra Thornton, who, for those who are just joining us today, and I am the Associate Director of the Working Student Success Network at Achieving the Dream. And I would like to welcome all of you to today's webinar on supporting financial health, a success strategy. As you all know, all too often a student drops out, not because of academic reasons, but due to a financial emergency such as a car breakdown or overdue rent payment. And this webinar will really be able to highlight ways to build the financial health of community college students, and it will allow you to learn from other colleges and financial experts on how you can help your students manage the financial challenges that interfere with their ability to succeed in school. And perhaps more importantly, this webinar will really seek to provide tips on how to choose and use quality products and services to better address the financial challenges of your students. But before reviewing the webinar's agenda, I'm going to briefly turn it over to Tran here at Achieving the Dream, who will inform all of us on how to use the webinar platform.
Hi, everyone. Right now on your screen, you can see the control panel for the Zoom webinar platform. And to access the audio settings, so you click on audio setting as indicated by A. In here, you will be able to view your audio setting in the case if you have any audio or if you have any audio issues. And by the end of this presentation, we have a Q&A section. Please enter all of your questions through the Q&A box, and that you can access that by clicking on the Q&A button. And if you need to send a message to other attendees or the panelists, you can send messages through the chat box, and you can raise or lower your hand by clicking on the raise hand button. And I will hand it over back to LaShondra.
Thank you, Tran. So again, as we go throughout the webinar, if you have any questions, please place them in the Q&A box, and you'll see that we've put in transition slides to open it up for questions after the various presentations. So for today's webinar, I will provide a brief summary on what the Working Student Success Network is. Following that, Tanya from CFSI will present on common financial health challenges community colleges face and how to use the compass principles to select quality products. She'll also provide some examples of the products that meet some of those challenges. We will then hear from two of our WSSN colleges that are participating in the WSSN Financial Products Program. And these colleges have designed their own interventions to address the needs of their students. And so I mentioned this earlier, but one of the webinar's goals is to really go beyond talking about financial health challenges, but finding actionable ways to address those challenges for our students. And our hope today is that from hearing from CFSI and our two colleges, you will have actionable steps to really start to address the financial needs of your students. So what is WSSN? So WSSN is really a strategy that supports 19 community colleges in 4 states, and those 4 states are Virginia, Arkansas, California, and Washington. And it's really an integrated approach to really help our low-income students reach financial stability. And so what we do is that we strategically integrate and bundle 3 distinct but related services, and those are education and employment advancement, income and work support, as well as financial services and assets. And one of WSSN's primary goal really is to build that financial stability of our students. And so we know our students are facing housing, food, transportation, and child care insecurities. And so through integrating efforts, we're really able to reach students much more frequently and more properly address their needs. You'll see on the slide that the 3rd bullet is highlighted because this is where a lot of this financial health and products work is falling under. And so not only do we provide our students with financial education and coaching, but 6 of our colleges have decided to partake in a pilot program, which really allows them to design and implement their own financial health interventions. And we'll hear from East Los Angeles and Kenyatta College, both in California, on what that process has been like to date. On this slide here, I just wanted to quickly mention that at DREAM, which was in February and is our annual conference for those who may not be familiar with it, ATD and CFSI co-released a brief titled Financial Health and Community College Students Choosing and Using Quality Products and Services. And again, as we know, financial products and services are generally not designed with a community college student in mind. So we thought it was incredibly important to illustrate how to select quality products and services with our students in mind, so that way we can best serve their needs. And so there's a hyperlink at the bottom of this slide that shows you where it can be found on our website. So with that, I'm going to turn it over to Tanya from CFSI, who will again really be able to highlight the common community health or community college financial health issues, as well as reviewing the compass principles that really provide a framework to selecting quality tools and services. So Tanya?
Yeah, thank you so much, LaShondra. Good afternoon, everyone. Thank you to Achieving the Dream for hosting this really important webinar and for having me on to contribute and participate. Next slide, please. For those of you who are unfamiliar with the Center for Financial Services Innovation, a quick intro. We are the authority on consumer financial health here in the United States and lead a network of financial services innovators that are committed to improving consumer financial health. We do that in three distinct ways outside of leading our network. We conduct deep consumer research, so we really have an understanding of the kind of behaviors and preferences and financial lives of the consumers that are most vulnerable and those that are struggling. We use that information to then advise both our network members and non-members in a kind of traditional consulting role to help design and deliver high quality products to consumers. And finally, we have a long history of investing in and seeding capital to kind of innovative and promising new solutions to the challenges faced by those struggling and striving to improve their financial health. That's all done in the context of our network, and we're always looking to kind of expand and deepen our roots in this space. And it's been a real pleasure over the last couple of years to slowly work our way into the community college space. It wasn't the most natural fit, and as we worked more closely with Achieving the Dream, we really saw a lot of overlap. So again, we're kind of thrilled to be part of this conversation and see the community college student as a real opportunity to learn more about financial health and improve it. So you might be wondering, next slide please, what is financial health? The way that CFSI defines financial health is in these three components you see here. Really, when your day-to-day systems help build resilience to weather financial shocks and provide the opportunity to pursue kind of the longer-term goals that you might have, whatever they might be. And I thought I would take this opportunity to humanize this framework a little bit, and I'd ask that you use the example I'm about to give as we think about the challenges that I'm going to present in the webinar today. So the U.S. Financial Diaries is a research initiative by the Center for Financial Services Innovation, that's us, and the Financial Access Initiative at NYU Wagner, with generous leadership support from Ford Foundation, Citi Foundation, and guidance from Omidyar. And what it did was really collect intimate and detailed daily financial data from 235 LMI households around the country. One of the participants of the U.S. Financial Diaries is Sarah Johnson. Her name has been changed, but for purposes of this illustration, Sarah and her husband lived with 3 of their children at home, and her life really reflects that of a typical community college student. She is a mother, she has a part-time job, as well as a full-time job, and she is trying to go back to school. Her husband has 3 jobs, so you can already see a kind of complex, various calculus of income sources that they're juggling. It makes it hard to predict cash flow each month. This is likely familiar for many of you. The tuition grants that Sarah receives come twice a year in rather large spikes in September and in January. So as Sarah's managing the finances for her household, there's a lot of kind of mental accounting that needs to be done. She assigns bills to different paychecks. She only automates a few of them because the income doesn't always match the outflow of expenses. Like any other household, there's unexpected expenses. Her daughter has asthma flare-ups or their roof leaks. They have very little cushion to weather through some of these unexpected expenses. She has been managing this way for years now, and it's difficult to kind of budget through that volatility. And she has growing credit card debt, which affects her access and opportunity to future debt. So just keep Sarah Johnson in mind as we go through the 3 financial challenges that we're presenting here today. I'm assuming that her life really mirrors a lot of the students that you all work with. So next slide, transition slide as we think about the financial health challenges that we observed from community college students. This was some informal and qualitative survey done a couple of years ago. And before I dive into this, I do want to just remind folks to feel free to ask questions throughout. I know it's a webinar, but we hope that it can be engaging, and we want to keep you kind of alert throughout. So please feel free to use that chat box. So the first challenge we're going to address is that of the volatility, managing cash flow and income volatility. So like Sarah Johnson, many community college students are managing multiple sources of income. Only 2% of those that attend community colleges have their full financial needs met with grants. So they often, 98% of them are looking elsewhere to make their financial lives work. 77% of participants in the financial diaries claim that financial stability was more important than moving up the income ladder. And community college students probably feel the same as they juggle multiple factors in their lives. Exacerbating the issues of volatility is just the misalignment between income and expenses. So oftentimes when some unexpected expense occurs, it isn't in tandem with an income kind of spike. So the timing of lump sum payments, such as tax refunds or financial aid disbursements, doesn't typically align with the cycles of expenses. We saw that a little bit with Sarah Johnson, and again, this likely sounds familiar to many of you who work directly with students, that this financial juggling is happening, and if you think a little more broadly, there are real consequences to that for those who are also trying to focus on academics. And unlike a traditional four-year counterpart, a community college student comes into their academic life already with kind of a full plate of life, if you will, that they're managing. Next slide, please. A second financial health challenge we identified was the lack of a financial cushion. So again, thinking about Sarah Johnson, when their roof leaked, they really weren't prepared for that, so they kind of had to direct all of their resources to fixing the roof. It was very immediate and fairly dire, and it was at the expense of some of their utility bills, and for a short period of time they went without utilities. So this lack of a financial cushion can have real consequence. So again, we're thinking about individuals that are juggling multiple responsibilities, and really being able to accumulate an adequate reserve of savings to draw upon is really difficult. So we did some surveying of community college students and found that compared to their counterparts enrolled in college full-time, students enrolled in college part-time are less likely to save on a regular basis. A third of part-time students reported that they could only make ends meet for 3 months or less, and nearly a quarter said that they did not know how long they could make ends meet if faced with a sudden drop in income. 25% of students didn't know what they would do if they woke up and income sources were depleted or had changed. Having a reserve is critical to cope with these shocks, and shocks, is often a misnomer because you can actually expect them to happen. According to Pew, 60% of U.S. households have experienced the shock in the past year, and more than half of them have struggled to make ends meet after experiencing this shock. And while data isn't available on the number of shocks that a community college student might face, we can assume that it will be comparable to the U.S. average, if not higher, given the kind of demographic realities we know about students and the balancing that they're doing with academia, family, employment, etc. In the absence of savings, individuals are often finding themselves turning to high-cost small dollar credit to weather some of these shocks. These products are costly, often including payday loans or pawn shops, and lead borrowers into a cycle of repeat usage and mounting debt, and really don't provide any kind of long-term solution for the needs that that individual might have. For community college students, the problem is especially acute because they must continue working rather than return to school in order to pay off the money. So their academic pursuits and goals often get put on the back burner to keep up with their financial lives. And finally, next slide, please. The third challenge that we identified was around the ability to access and build credit. At this point, you're likely thinking that all of these challenges look familiar and might be those of a typical LMI American, and that's true. And given what we know about community college student demographics, they mirror much more closely the general population than a four-year traditional university student. So it's no coincidence that these challenges are comparable. That said, the community college student faces a kind of added degree of complexity given that they are pursuing academic achievements and goals. So accessing and building credit, it really is a linchpin to anyone's financial health. So whether kind of to fill some short-term cash flow gaps or to pursue longer-term opportunities, high-quality credit really can decrease the negative impacts of income volatility and allow for the access to and beginning of wealth-building purchases and investments. That can include, buying a home, starting a business, higher education, or any plethora of other longer-term opportunities. We know that community college students are typically older than traditional and may have credit histories that are damaged. There might also be younger community college students that haven't had the time to build a solid credit history. We know that there's a good number of immigrants in this community college population who may be very new to this country and not have access, or maybe just have a thin file based on their citizenship status and the length of time they've been in the country. Those with limited credit options often turn to private loans or high interest credit cards if they wish to pursue academic or other types of goals, and these are riskier and more expensive options. They often lack flexible repayment, they lack the protections of federal loans. The limited and volatile incomes make more traditional repayment structures more challenging than for someone who is paid, the same amount every week and is managing a much simpler financial calculus. According to Annie Casey, a damaged credit report not only impacts students' access to future credit, but it's also expensive. Lower credit scores often mean higher interest rates and can cost a borrower up to $250,000 on the high end in fees and interest over their lifetime. So now we're going to switch gears a little bit and talk about what types of financial products and services can be used to address and mitigate some of these challenges. Next slide, please. At CFSI, the foundation of our work is in our COMPASS principles. It's our quality for standard among financial services and products. So you'll see that we haven't used the terminology around unbanked or underbanked much. I haven't, and that's been intentional. The move to financial health is really a recognition that those without formal relationships to banking institutions can still be financially healthy, that banks are not the end-all be-all. So it opens the conversation up to financial services and products that aren't bank sanctioned. And there's, a plethora of alternative financial services products out there, and the COMPASS principles were really designed to help any kind of provider and consumer of any type of product to be able to gauge whether it's high quality and ultimately benefiting their financial health. So this idea, it's not simply around one of access to financial services, but rather a question of the right and the high quality financial services that will improve financial health over time. Let me go through these quickly. You can visit our website for more detail around the principles and how you can use them in your own work. But starting from the top left there, we have embracing inclusion. So really responsibly expanding access of your product to those consumers who are traditionally underserved, either individuals or communities. Then we have building trust, so developing mutually beneficial products that deliver clear and consistent value, so no surprise fees, no hidden charges. Consumers know exactly kind of what they're paying for, when and why. Promoting success, so there's features that drive positive consumer behavior through smart design and communication, some automation, different forms of engagement. There's a variety of ways to promote success, and ultimately create opportunities. So this idea of providing options for upward mobility. Consumers have appropriate options that can help them continue to build their financial health. So with the last few minutes I have here, I want to talk through a few products. There's, in the paper that LaShondra mentioned at the beginning of the webinar, there's a full presentation of the different products that we examined that really address the 3 financial challenges that we presented. So we certainly encourage you, if you haven't already, to take a look at those. For the webinar today, I just picked a few from each bucket, and I know I only have about 4 or 5 minutes left, so I'm going to run through these, and then please do ask questions or hold them for when I'm done here. But managing income volatility, starting at the left, Simple is one of a kind of myriad set of products that are becoming more popular. It mirrors a bank account, but is not tied to a traditional banking institution. So you can do all of the things that are associated with a typical bank account from your mobile device, and a Visa card that comes with the account. So you can set goals and deposit checks. They calculate for you what's safe to spend based on the bills and expenses that you input. There's no fees, but you still get the peace of mind of an FDIC insured account. And again, it's all kind of done mobily and on the go, which can be a real advantage for students, balancing a lot of different factors in their life. Even is a really interesting app that automates volatility, if you will, or finds a way to help folks manage and budget volatility. That's a better way of saying it. So really leveraging periods of high cash flow in order to bolster periods of low cash flow. What even does is they examine your income in different pay periods and find an average that the highs and the lows kind of amount to, and that's your sort of magic number. And on pay periods that are higher, they reserve some of those extra funds and cushion you on pay periods that are lower. So using that volatility to really smooth over time your income. And there's a feature that they've recently introduced called the boost. So for those periods of time that are low cash flow, but you don't have a cushion from a higher cash flow period, they will provide that for you. A lot of times employers will pay the small subscription fee. If they don't, that is the one feature of this app that does come with a fee, but it's fairly minimal. And that peace of mind of the income smoothing really helps individuals budget, manage, and save. And then the Community Financial Resources, CFR, we'll be hearing from Lauren shortly, but her team has several relationships with credit card providers and banks and credit unions, and just wanted to highlight the Focus card, which also has no monthly fees, doesn't require traditional banking institutions. You can use ATMs for free. You have a separate savings bucket to really encourage the building of a cushion. You can use it with direct deposit, so any way that folks are getting checks can be used with this card. There's no overdrafts, and you can track your spending. So again, here's just a sample of tools that students can use to help manage their income volatility. Next slide goes through a few products that can be used to help students build a financial cushion. So capital is a real interesting one, using some elements of behavioral economics that help individuals save for any goal that they might have, including a rainy day cushion. So, and it's really customized to you, your habits, your preferences, and this idea of setting and forgetting, which is kind of a well-respected tenet of helping boost consumer savings. Consumers decide when they want to trigger or deposit their savings. You really they're leveraging technology and the use of mobile apps. So for example, there's a, not exact, I think that it's called IFTTT. It's if this then that. So consumers can say, you know, when I open up Facebook, save $2. When it's raining outside, save $3. So these kind of engaging, fun, gamified ways of automatically savings. They can be stopped at any time. There's no fee for them. They can be more traditional, like on the 5th of the month, save this amount of money. There's also an element that can be made public to share in successes and use that element of peer support to boost and encourage savings. Opportunity Fund, some of y'all might be familiar with them. They're based in California, and right now they're focused on clients in a few counties in California, but they work with community partners to help LMI individuals and families build a budget and begin saving in small increments, and there's a matched savings element to it. Earn is another provider of micro savings, and they're national and have a slew of online tools that can be used. So those are both organizations that have a match and really encourage micro savings. So this idea of large amounts of savings can be overwhelming for consumers, so really helping folks start small. And then Digit is an automated savings tool that links to a bank account. Unfortunately, at this time, there is no link for prepaid cards, but for those students that have a bank account, it tracks your activity, your income, and your outflow, and withdraws small amounts of money that are designed to not be missed by the user. Again, it can be stopped at any time. Withdrawals happen in real time, so when the student needs the cushion that they've built, it's there for them without a fee. And finally, I'm going to kind of run through this last slide here. Tools, thank you. Tools meant to help students access and build credit. So Ascend Consumer Finance helps consumers refinance up to $12,500. I apologize for the quality of that image there. It's a little blurry, but you can still see the amount that can be refinanced is up to $12,500. There's lower rates, flexible underwriting, and rate rewards. That's the most exciting feature of this product, is that those who have positive on-time repayment behavior can lower their interest rate as they move along the terms of the original loan, and the rate can go be cut up to 50% in half from the original rate. So really incentivizing continued repayment and tracking how that's whittled down over time. Self-lender is taking the ideas of a secured card. So the individual here needs the money up front. That can be a barrier for some students without a financial cushion, but for those who have the money but don't have positive credit history, they can put in the security deposit and over time pay that back, and those payments are then reported to bureaus, rebuilding or in some cases establishing healthy credit behavior for that consumer. And finally, eCredit Hero, plus the product, more of a service, really just taking this idea of how important it is to know your score with a customized set of, you get all three of your reports and then customized advice and support to help identify and dispute errors, including collections, missed payments, student loans, judgments, bankruptcies, repossessions. They send in the letters for you, do a lot of that kind of overwhelming administrative burdensome work of being in touch with the bureaus to help get your credit score back on track should it have been, thrown askew erroneously. So I think I'm a few minutes over. I guess I'll hand it back to LaShondra. At this point, I'm not seeing.
There is one question, Tanya. The information on financial diaries and the financial challenges of the students, one of the participants wants to know if that's related to an article by Graves and Savage.
I'm not familiar with either of those names. I can look up who that is. I'll take a note of it, but I would say, because I'm not familiar with those names, the answer is likely no. But why don't I get back to that participant?
And then another question is, how much of the research is primary research conducted by CFSI and how much is secondary data?
Yeah, so during the presentation, I did a little bit of a hybrid of data sources. So the three primary sources that I use today, one was the qualitative surveying that was done a couple of years ago with the WSSN cohort, both from the administrators and then some surveys to students themselves about their financial lives. Then in 2015, CFSI came out with a consumer financial health study where we surveyed 7,000 Americans and really for the first time got our fingers on the pulse of what the state of financial health was in this country. Of that sample size, we were able to call some of the folks that marked themselves as part-time students. So some of the data points that I used are reflective of that cohort, acknowledging that not all part-time students are community college students, but we did some extrapolation around similar lives. And then finally, the U.S. Financial Diaries data, like I said, that was a joint research initiative with us and the Financial Access Initiative at NYU. And small, shameless plug here, we actually, next week, the U.S. Financial Diaries book is launching. So taking all of the research that if any of you are familiar with or those that aren't, the real kind of intricate, intimate details of people's lives, the stories behind them, the names, the life events, the things that happened to them, all in a book. It's coming out next week. So I encourage y'all to take a look at that.
Okay, so I think I'm going to take it here. This is Lauren Leimbach. I'm the Executive Director of Community Financial Resources, and I've had the pleasure of working with several of the colleges on developing financial education programs and financial prototypes, which we call the work to use products and tools, financial products and tools to produce behavior change in students while we're doing financial education and coaching programs. We're going to hear from two colleges today, East Los Angeles College and Cañada College. And first, we're going to hear from Miguel Dueñas, who's the Associate Dean of Student Services. And then we'll hear from Adolfo Leyva, who's the Director of the Spark Point Center at Cañada College. As Miguel and Adolfo walk through their presentations, they're going to talk about how they integrated the Compass principles into their work. And they're also going to provide a few recommendations for other colleges on how to get started on this type of program. So, Miguel, why don't you take it away?
Yes. Well, hello, everyone. So I'm going to go through this presentation fairly quick. I hope I am able to cover everything and give you guys an opportunity to ask questions afterwards. So for East LA College, I just want to give you a brief overview of our campus. We service 39,000 students per semester. Majority of our students are Latino, and a large percentage of our students are low-income students. It gives you an idea of our campus. One thing that I want to connect throughout this presentation is a topic or theme that we connected at WSSN, a dream, is love. We definitely want to, elaborate on love, and that really connects with a lot of building the trust, accessing for our students, because that's how we tailor this program. Okay, next slide. So a lot of the work that we do here, again, was focused on our students and ensuring that we are able to provide opportunities for our students. Our work addresses the core challenges of financial management habits. Financial management and the subcategories: debt, credit, savings, spending, and budgeting. These are common topics for working professionals, but in our community, it was an area that was lacking. We noticed in our student community, there was not much conversation around this. And with this, came across when we connected with ATD to be able to develop a program, and that's what we call our financial wellness program, to share this information with students. Really understanding our community, working with them, building trust is very important, because again, our students are one that if they have trust, if they trust in you, they will continue receiving services. And to this point, we really have grown our program. And I also have Alouette here sitting next to me, which is the person in the picture on the far right. She's been doing a great job with meeting with various groups of students from various programs and just general students. So again, through this presentation, I'll share a little more about how we did this. Next slide, please. So one of our ideas here, again, is to establish a consistent financial management habit, is thinking about our spending. So you see here far left, the think before you spend. It's a little catchphrase that we have here. I don't know if came up with this. Is it totally worth it? How am I paying for this? Is this something that can wait? Is it something I need? Keep track of your spending. So again, it's interesting how we share this catchphrase with students. As students go back, we had a student from continuation school that came back and participated in this training and went back to the campus and shared this. The thing I remember is think. And it was interesting how it sticks with them. And then it continues over to the budgeting worksheet. Once they have really thought about everything that they were doing, they go into their budgeting worksheet to identify and break down their spending habits and seeing what it is, where their money is going. Now with that, again, we're focusing on financial tools. And we researched many tools. We went through various apps to identify, see what will work best for our community. And Spending Tracker for us was one of those that stood out because, again, it's easily accessible for our students. They could use it through their iOS, through their Apple or Android, and it worked great, and it was free. That's the most important part. It was free for our students. So it has shown great success with our program here. We have students that have identified goals that they would like to do with their financial monitoring, and Spending Tracker has assisted them with attaining those goals. Next slide. In this part here, we have our financial behavior change and tools equal success. Financial education workshops with a focus on behavior and change and individualized coaching has really, again, built that sense of trust. Going back to the love, really has connected with the students. You know, we show that we love and care for them enough to provide information, but also tailor it specifically for them. Performance agreements is also part of that. When they meet with Alouette, we have the students sit down and they identify some goals, develop a performance agreement, and develop a game plan on how to attain those goals. Through that, we also use different applications, different credit tools, financial tools, like, for example, Credit Karma or annualcredit.report.com to support the students. The last bullet you see here, financial products information such as auto loan comparison sheets, direct connections to institutions that can assist students. And we definitely look for those that are nonprofit that the students could, again, connect with, and there's no hidden hook that might take them on a different road. So we're really mindful, again, of our students and ensure that they have access to great services that will create great opportunities for them. Next slide, please. So we go into gaining buy-in. This is the most important part. Again, sharing the love with campus-wide, and having an aligned vision, with our campus, understanding what our connection with our goals. So we share this information with our president, and our president just stepped in right now. So he's again supportive of our financial literacy. He's going to say hi really quick, Marvin.
Hi, hello.
Achieving the Dream.
Oh, hello, hi, how are you? This is Marvin Martinez.
So then we go on into engaging students. Again, continuing the love, developing a welcoming environment, building trust, consistency, scheduling our programs in academic year. Again, thinking of our students and how we connect with our students to ensure that they are able to access new services consistently. So we have a one day at a time where we schedule our trainings. We also use the same location. Again, we try to be consistent with the work. Again, supporting that trust. And that is been working very well. Our campus has really been growing. A lot of our faculty has brought in students to our trainings, have referred students, and they themselves have participated, which has been great. Next slide. And this is our recognition dinner. Just really quick, kind of recapping everything that we've done. And this is an opportunity for our students to come together, network, share some of their grows and glows, as you may call it, identifying the areas that they had challenges in, things that they really excelled in, but connecting with each other, sharing best practices. This was last for our first semester. Now our next one will be May 17th. Following up with this group and identifying some of those, or recognizing them for accomplishing their goals. And that will be the end of our presentation there.
Any questions?
Okay.
All right, then Adolfo
I see one
Leiva.
question. I see one question on the Q&A. Should we answer that now, Lauren, or should we answer it later?
Oh, go ahead, Miguel.
This is Miguel. Are you using the budgeting worksheet from Cash Course from the Chancellor's Office?
No, we're not. Actually, we're the budgeting sheet. This is LOS. The budgeting sheet was created by myself because it's based on actually like what the students are telling me that they actually spend their money on. So like rent, auto insurance, things like that. So it was created here in-house. And it's going to actually be edited again as a needs arise.
All right. Well, thank you, everyone.
Gracias.
Adolfo, you want to take it away?
Hello, everyone. Good afternoon. My name is Adolfo Leiva. I'm the director of the Spark Point Center at Kenyatta College. Thank you for having me present on Kenyatta Cash today. Kenyatta Cash is one of the prototypes that we're utilizing here at Kenyatta College. Spark Point is actually an initiative of the United Way of the Bay Area, which is an effort to primarily meet the same goals that WSSN is striving to meet. So next slide, please. So Kenyatta College is located in San Mateo County, the third most expensive county to live in California. What we find is we find an extremely high housing cost. We of course encounter food insecurities. Our campus is a Hispanic serving institution, and our population is about 6,000 students. Our students are experiencing food insecurities, homelessness, transportation issues, an increased revolving debt crisis, and they're experiencing longer degree and certificate completion times. Of course, financial aspects are impacting all of these. Next slide, please. So one of the challenges that we had is I just mentioned that our students are taking longer to complete. They're busy. They have lives. They're trying to manage multiple challenges, children, work, school, education, time, and other life issues. So because of that, when we first started instituting financial education here, we were committing to students or promising students a 2 to 3 year relationship. What we found is that students wanted a shorter term relationship. They wanted something that would last 4 to 6 months where they could see a more immediate gratification, a more immediate result. Because of that, and they're still trying to tackle savings, credit, scores, debt, transactional banking capacity, and of course they're trying to complete their goals. So what Kenyatta Cash does is in 4 to 6 weeks, it connects students to an incentivized product whereby for completing positive financial behavior, they can earn $25 up to 4 times. So as Tanya was mentioning, Sarah Johnson's example, I can't save. I don't know where to start to work on my credit. I can't establish that financial cushion. Oftentimes students come and say, well, I don't have enough money to save. Well, by completing Kenyatta Cash, next slide, please, a student can easily meet with a coach. They could organize their financial documents. They can complete a spending tracker. They can set up direct deposits. They can review their credit. They can improve their credit. They can obtain a secure credit card, or they could just save money. And by doing so, for doing that 4 times, they will receive $25 each time. And again, because this is a 4 to 6 month relationship, a student can actually walk out with a tangible amount of money in a short-term period of time, which will hopefully lead them to positive financial repetitive behavior that will provide them with longer benefits in the long term. Kenyatta Cash, what we're doing with Kenyatta Cash students is we're going to then compare their success, completion, and retention rates to non-Kenyatta Cash students to then measure the level of or the increased student success that they experience. So that's really what how we're going to measure our progress. Next slide, please. So in terms of partnering and how that needs to impact, the question then that's raised is why partner? Well, basically, we know that we can't serve everyone. some of the services that we offer are not within our scope that our financial coaches are able to offer. And because of that, we want to make sure that we're connecting students to the correct in-time service that they deserve. The last thing that we want to do is give the wrong information, incorrect information, or information that's going to have a negative impact for students over the long term. We also know that we're not the experts in every field, but we can network with the right experts, and therefore we can actually expand our bandwidth in terms of who we can serve and how we can serve them. As you can see, the little chart, the first chart that's on the left, shows that the 3 most popular pathways selected are saving $25, working on your credit report, and completing a spending tracker, which then again goes back to Tanya's 3 challenges that she was addressing. By incorporating these behaviors with financial education, we're then able to really bring peace of mind and bring some financial stability to families. Individuals, much like Sarah Johnson, who are trying to make ends meet, who have multiple jobs. How can we work with them so that they can maybe perhaps not have that 3rd job, maybe only have 2, or maybe only have 1, and connect them to financial aid, to TRIO, to EOPS, other categorical programs, to other programs that we all have on our campuses that are designed to assist students, but which for whatever reason, students are unable to connect. And part of the reason why they're unable to connect is because many times we hear from students that they didn't know that they were eligible. They didn't think it was for them. It's too good to be true. Or perhaps, I don't know where to start. I don't know where to go. I've tried before and I've failed. By connecting with a program like Kenyatta Cash, meeting with a financial coach, having the advocacy that individuals are seeking, we're able to really connect students to those services that they're seeking. Next slide, please. So some of the lessons that we wish to share with you is, again, engaging students. And Miguel gave a very good summary of some of those services. And for us at Kenyatta College, it starts off with there's no wrong door. We want everyone on campus to know that SparkPoint is a service that can provide you with some financial capabilities, whether that's coaching, whether that's resources, whether that's a referral, whether that's simply connecting you with something like co-op so that then you can have enough units so you can be eligible for EOPS or other programs that require a minimum number of units. However, students are already busy. They're busy. They have families. We're connecting here with our EOPS and CalWork programs. And the challenge that we hear from those students is, do I have to attend another meeting? They already have a full schedule. So really, how do we manage providing them with the resources where they can really benefit in the short term and really see some long-standing benefits? And it starts with developing that trust and credibility. The trust and credibility is critical. Until we have that, then students don't see the value, or perhaps they've tried other resources and they found that they've failed, that they have not been successful, whether it's because the service let them down or because they just met with the wrong person who was having a wrong day. Let's connect you with the right people. Let's create that trust and credibility from the very beginning. And again, a lot of students just don't even recognize that they're eligible. And for a lot of our students, we found that we need to connect to them. We need to connect them to resources up to 4 times before they even recognize that this service is for them. I want to stress that they're already busy. They have a schedule. They have other responsibilities. And then, are they really ready for a long-term relationship? And again, Kenyatta Cash is designed to provide them with a short-term relationship that will provide them with the benefits that they will then recognize, which will then have them seek out some longer-term benefits. Now, where do we start? The starting point is really defining what your challenge is, and each college is different. We all have different demographics. We need to understand who we're serving and identify what resources we have on campus, what our leadership looks like, what the culture looks like, what is the culture like for our faculty, what's the faculty involvement, our deans, our vice presidents, where is the money, our budget individual, how connected are they with what we're offering? And then that then leads to data collection. What metrics are we wishing to collect? How does that then tell the story? And how effective are we at really capturing the change that we're wishing to demonstrate, because it comes down to dollars, and we need to demonstrate the impact that we're having and the return on our investment. Now, that most often starts with marketing, and how are we branded? How are we seen by our college, and how do our students see us? What efforts do we have? Are we connecting with the marketing department to do some graphics and some flyers and some really public relations materials that where students see themselves, or does it just blend in with the rest of the college materials? And again, how can we make adjustments? How can we measure what we're doing and then be readily available to make the adjustments that need to be made? Because oftentimes what we don't want to fall into is the trap of, I'm doing the grant and then I really lose sight of the real goal, which is really serving students and the benefit to those students. And the third bullet here is just to go. Sometimes you just have to build that bike as you ride it. You just start something, see how it works, make adjustments, and you really just start seeing how you can make an immediate impact. Because every day that I'm not serving a student is a day that a student is going hungry. A day that a student doesn't have secure housing. A day that a student has to try to determine how they're going to pay for that bill that they don't know how to pay for. Next slide, please. So with that, I'm done with my presentation.
Okay, let me quickly recap here and then we'll take some questions. So Adolfo and Miguel talked about students need financial information, coaching, and then more importantly, tools that they can use to promote financial health. And to get started at your college, make sure you understand the financial challenges facing your students to drive your program content. Figure out the key student touch points to deliver support, how and where and you can effectively engage with students so there's no wrong door. And then finally, cultivate your campus and community champions to support the initiative. So I don't see any questions in the chat box. Adolfo, Miguel, are there any directed towards you?
Actually,
I see one here from...
Yeah, I see one from Abby herself.
Okay.
I'll answer the one from Abby. Before we started, I'm sorry, the question is, how do we get buy-in from faculty and staff for a no wrong door approach? How do you ensure that each door has the most up-to-date information? The way that was created was when the WSSN grant opportunity came about, Kenyatta College gathered faculty and staff, key decision makers and key connectors amongst the college to create a task force that was designed to explore how a center like SparkPoint could benefit students. Once they had that buy-in, it really paved the way to provide the financial backing to support the program and also the cultural environment in which was supportive. Now, how do we make sure that every door has the right information? That's really tricky because information is changing so quickly. So what we do is we make sure that everyone knows how to connect to SparkPoint, that SparkPoint can connect you to resources. We don't expect every door to have the most up-to-date information, but we expect every door to know that SparkPoint is a resource for students. Once they reach us, then we can triage what their needs are, make an assessment, and then begin providing them with the resources that they're seeking to meet their needs.
Okay. And either Adolfo or Miguel, can you describe the process you use to decide what products and tools are appropriate to recommend to students to produce positive money management behaviors?
So, Elliot and I can jump in.
Oh, you do that, yeah.
We developed the process here just so we reviewed. Elliot did a lot of research on different apps, and we actually had together to identify which one worked best for them. I'll have Elliot share a little more on the process for selection as well.
Yeah, it was actually really like perfect timing because I believe it was Lauren that told us about Spending Tracker, and so I checked it out and I really liked it. But I also wanted to see what other tools were out there. So I think I researched about 45 different apps just to see which one would fit our students. But first and foremost, I understood the whole trust issue and a lot of things that were going on with our students. So my goal was just to find something that was easily accessible to them and somewhere that they wouldn't have to put their personal information into. So it doesn't have to connect to any accounts. It doesn't have to connect to, they don't even put their name in there, location and nothing. So knowing that it would be a trust thing and we just wanted to make sure that they had something that they could easily access. we were able to do that. And so spending tracker is how we figure that out. Now, with regard to other tools or connections that we may have, we always are like the gatekeepers. We want to make sure we ask a lot of questions, like, who are you? What do you want to do with it? This is what you're expecting from us. This is what we expect from you. There's a lot of, especially 2 or 3 probably meetings beforehand, just to make sure that the product is going to be something that's suitable for our students at the time, and something that they can actually get to when they really need it. For example, there's some students that come in that they're like, I really need a loan, a personal loan, but I don't know where to go, or I just got it from this bank, or things like that. Then I can always have access to different credit unions, and I can ask them questions for the student while the student is there. And that's really cool because at least they can get education. Does that answer the question?
Lauren?
Yes.
Yes, brother.
And Lauren, with a question about access tools or accessing which pathways they wish to pursue?
It was products and tools.
Okay, so we have what we call a welcome form for our students, and the last question is identifying what are their 3 most important financial needs that they wish to work on. And then once we identify what those are, we, really by listening to the students, then we're able to connect to services, much like what Alouette was talking about.
Okay. And I think we're almost done here.
Oh, just really quick. So as time went on, we noticed that a lot of the biggest challenge of the students was keeping track of their spending, and that's why the Think has been so popular. It's simple, it's easy for them to understand and to just keep in mind. And so we have utilized Think from the first workshop ever, the first interaction ever with the students, and it's worked.
Thank you.
All right. I think we're almost at the end of our hour here. LaShondra, any closing comments?
So first, I just want to thank everybody for participating in today's webinar. I think it's been really informative, and I hope that you all feel the same. On the screen here, if you're not familiar with Achieving the Dream, or if you're not on the listserv, there's a link for you to join, as well as contact information for all of us that have been talking today. But we just want to take a moment to just say thank you. We are very appreciative of your participation in today's webinar. Following this webinar, we will send out this recording, the PowerPoint, as well as the financial health brief that both ATD and CFSI co-produce in an email to all of you. And then just lastly, both Miguel and Adolfo talked about some of the lessons that they have learned while designing and implementing their financial prototype. And in early May, Achieving the Dream will actually release another brief focusing explicitly on lessons learned and actually implementing financial health interventions. And so we encourage you all to join the listserv if you're not already on it, so that way when we release it, that you will be immediately notified of its release. But again, lastly, just thank you again. And if there aren't any further questions, we will say goodbye. So thank you, everyone, and have a great day.
Thank you.
Thank you.
Bye.
Thank you.